Everyone, welcome back. This is Richard and Ross, and this is our 2020 model book walkthrough series. And today we're going to be talking about Tesla, pretty much the true market leader of this past year. So Ross, I'll hand it over to you, and we'll talk through the daily chart of this TML.
Absolutely. And so what we're looking at here is the run through 2020. Here is that correction into March and the beginning of April. We ultimately get a follow-through day on April 6th out of the NASDAQ. As you look down here, April 6th. So just a few days later, you get this big volume pop out of Tesla. We don't have it marked here. We waited a little bit, but I'll be on, as I'm looking here, if you really wanted to play the early game, you could have drawn a trend line here.
Right.
And probably wiggled your way into a small position there. And like I always say, as long as you have some edge and you're managing a risk, you can't manage a risk from nowhere. It's got to be logical. In this particular case, you do have a moving average there. That makes sense. So it'd be worth at least, let's say, putting on a starter early. In any event, though, the market follows through. We get explosive volume through this first pivot, but then straight up as we form much more of the right side of Tesla's base here in just one day, we run into resistance at where you would expect. This black line is its 50-day simple moving average. You've also got this, you'll see where we have this line drawn as the beginning of a gap. So you get a little pause into logical resistance. 9 times out of 10, I would tell you I'd be looking for somewhat of a consolidation and then a move. Instead, you see further strength, a big gap up, and then you've got that consolidation, which is nice. You get you push through that, through the gap above its key 50-day moving average, and then volume tapers off as you get this nice drift into its 10-day moving average. And yep, volume tapers off. And now you can start watching for, let's say you didn't get it. And again, this area here is super early. This here is still considered early according to the textbook. And at this point, I'll tell you, the closer you are to prior highs, the less resistance you have in front of you, and the odds of success are that much more just based on sheer supply and demand. So now Tesla's clearly on the radar. As we discussed, it was the leader of 2020. If you take a quick scroll down here, we can see earnings and sales were, other than a dip in their quarter-over-quarter sales in this June 30 quarter, we had an immediate pickup and acceleration to new highs. And even though we're not seeing quarter-over-quarter acceleration for the last 4 quarters of earnings, we are showing almost triple-digit growth, if not bigger, each of those quarters. So 95%, 105. 300, 140. So even though we have dropped to, roughly 100% from 300%, that's not the end of the world. It's not like dropping to 5% or negative or something like that. So in any event, we've got the earnings and sales in play. Clearly at this point, we've got, a couple quarters of huge triple-digit earnings behind it. Now it's clearly on the radar, and we want to start paying attention. So unfortunately, we get a breakout attempt that fails rather miserably in a hurry, fast and steep. Fortunately, however, it is clearly saved by its 23-day exponential moving average here. It holds it like a champ, proceeds to tighten up above not only its 21-day and 23-day. So let's very quickly, this light blue or the cayenne line is 21-day simple. The green line that you can barely see below it is the 23 exponential, and the light green or lime line is your 10-day. They're all very close together. But other than this, 2 days of volatility, which ultimately gets picked up by its 23-day exponential moving average, everything, from that point on, you've got super tight constructive action as you move, sideways. It's tight on light volume. The moves to the upside are on big volume, and you sort of get that action the whole way through. Now, we're going to back up a moment here. Let me clear up some of this mesh that I've drawn. And this is something we discussed on, it's one of the, exactly, the key radar, the key, I would say, to getting
Signal,
a lot of
yeah.
these, the key signal to getting a lot of these stocks on the radar is the outperformance and relative strength. Right here, in addition to that big, powerful blast through key resistance, even though we've got the squirrely action here, this relative strength line is telling you to pay very, very close attention. Notice,
Right.
prior highs are here. In general, you want to see a stock's relative strength line make new highs with the stock. So when you start to see the relative strength line make new highs well before the stock goes into new high ground, that's letting you know to, I'm going to tell you many times, that's letting you know the stock's getting ready to make a move, assuming it has your CANSLIM characteristics. That is not, it is applicable to other stocks, depending on what's going on, the momentum, their group, but in general, you've got to remember this is applicable to stocks, leadership type stocks in the proper industry group, so on and so forth. So that being said, you've got a lot of things screaming, put me on your radar, and you'll notice the relative strength continues to go ahead and make highs as the stock is tightening up and showing all of this extremely constructive action. That in and of itself, so you're seeing the continue. So the Tesla never, once it goes into new high ground after this point, it may wobble a little, but it holds consistent new highs. At the same time, you're watching all of this constructive action going on. So when I see that going on, that gives me, now I want to pay close attention to what moving average, let's take a step back. What moving averages are we holding as we tighten up? What are the characteristics that are developing here that I can use? I'm not going to say rely on, I never rely, anything can fail, but at least, in terms of managing risk, what makes sense. So we can see the first big shake here is telling you it's really liking its 23-day exponential. And now you can see as the stock tightens up and moves higher, it's developing more and more respect for this line as you make progress. So when you see the relative strength screaming like that, the earnings, the triple digit earnings starting to come in, a stock that has a compelling story. I don't think it was a secret to many at this point that this was one of your biggest, if not the leading stock of this cycle. That gives you the confidence to be adding to the stock when you see it shake out to quote unquote logical support every time it it holds it. It gives you the reason to do it. Let's say again you ignored the stock the whole way up and you want to stick to the textbook. By this point, your little evidence sheet of reasons to buy versus not to buy, it should be very heavy to buy at this point, even if you waited for that classic breakout on big volume out of through highs. You've got massive amount of evidence built up in your favor here. You've got big edge from 193. You're making awesome progress all the way up to, what is that there? 259, 359?
359 flat, it looks like.
Right. Okay. So from 200 to 359, you're making incredible progress here. You barely get it. You've got barely a shake under its 23-day moving average. Even if you didn't have a rule to keep you in for a day, Tesla, like so many leaders do, gives you an easy way back into the stock as it recovers here.
Right.
And as we see, unfortunately, after its run up here, we do pull back, retest the pivot, and we can see as we break its 23-day moving average, we're beginning to develop a respect. Well, for first, it's 50-day, but here we break the 50-day is contained by a 65, and as the stock again, it's very similar action here as we saw here, right? Right. It was wide and loose to tight. So here again, we've got this wide and loose start to tighten up. Volume clearly drops off a cliff, which is an indication that even though we're not going anywhere, there's no sellers to be found. So you've got this super tight action, and now Tesla is letting you know that, okay, we shake below our 23 and our 50, but the 65-day has become our friend now. Right. So in the same way that we see that in so many cases that the tight low volume get followed up by a big volume push higher, you see that same sort of thing. that low volume, tight fade into its key moving average. And then all of a sudden, here we go. You've got the big volume push straight through resistance, letting you know that there's some institutions interested in buying some stock here. And once again, once you clear that major resistance, you're off to the races. And it's 23-day moving averages containing your move from there. And we will go and take a look at Tesla where it is now. It'll be interesting to see, because I don't remember off the top of my head exactly how long it's contained by its 23-day moving average before it starts to base build and go through its current consolidation.
For sure. And just a reminder here, don't feel like you've missed a stock just because you've seen it double within a base. I mean, here it goes from the 100s to 200s before really moving all the way up to ultimately near 800. So buy it at proper spots where you can manage the risk as early as you can during tight price action with low volume as well. And that's a recipe for success, especially when you've got a stock with great annual estimates, killer earnings, quarterly earnings. The whole group was strong. Neo, Plug, a bunch of kind of EV type stocks were working in 2020. So really everything came together here for 2020 and formed kind of a perfect storm that led to this huge increase. So with that, let's go over and talk about the recent price action, which isn't quite as strong as 2020, but it's still one to watch carefully.
All righty, so now we're looking at Tesla on its most current Market Smith chart. What I've done here, in addition to its 50-day simple moving average, which is the red line, I've gone ahead and changed the other two moving averages to its 21-day simple moving average, which is the green line, and its 23-day exponential, which is that pink line. If you remember when we were looking before, we saw Tesla has developed the respect for its 23-day moving average. We can see here's where it started to lose that average. If we remember before, and we don't have it on this chart, that's when Tesla fell to its 65-day exponential moving average. I can tell you just by looking here, this is below its 65-day exponential. I can tell you that they're just by looking at the spread, even though we don't have it here. So we finally do close below Tesla's 65-day exponential in addition to its 50-day, which is going to be your classic sell in the case like that. And so far what we're looking at here is, we finally did undercut the 23, the 50, the 65. And like I said, we're currently base building. It looks like we are starting to develop respect for its 200-day moving average. Now, keep in mind, leading stocks can go on for a very long time. I have zero predictions on Tesla. I have no idea what's going on there. I don't know if Ford and GM will eventually take them out of the picture. Who knows? Anybody could speculate on battery technology, who will be the first to autonomous driving, how quickly will that be adapted, the safety, that whole sort of thing. But Tesla is definitely not out of the picture for a stock to find. Let's go back monthly, weekly, we can see Tesla hasn't touched its 200-day moving average since back here in March of 2020. That was that was when it put in its bottom and we started to see the outperformance and relative strength. So that's what we'll be looking for. I would point this out, and while we're looking at the weekly, for those of you familiar with what we call Bill's count on the weekly chart, where we simply count starting with the first week down, and the first week down off the high is the beginning of its most current consolidation. You want to look and count how many weeks of distribution versus how many weeks of potential accumulation. It's not as simple as just counting red versus blue, as we know. What you want to do, and this is a little trick Bill taught us while I was there, you look at a stock's weekly chart, you look at all of the weeks of above average volume, that are down volume versus up volume. You want to do a close analysis and see which ones are actually accumulation, which ones are actually distribution. Remember, color in and of itself isn't going to tell you that. You've actually got to look at the closing range. And anytime you're looking at a stock that has more weeks of distribution than accumulation, you want to wait for that accumulation to come in and be in excess of. So by no means would I rule out Tesla here. As we've discussed, Cisco and plenty of other stocks have had significantly bigger moves than we've seen Tesla have already. Cisco being 65,000% from its IPO breakout till the time It topped in that 2000 tech bubble. So just keep an eye on Tesla here. Watch accumulation versus distribution. Keep a close eye on relative strength, and also watch the group. And the reason I say that, and I'll bring it up while we talk about the group, industry group and sector are extremely important. Remember, it's almost 50% of a stock's move. And I would say this, the group is doing well. Just taking a look at Ford off the top of my head. We've got something new and improved going on here. They just came out with their new F-150, which, if I'm not mistaken, is the most popular pickup in America. Their gas model, if I'm not mistaken. So, and I've talked to a few people that have, you're right, the estimates. So there's something new going on here. This Ford truck is a big deal. And from what I understand, while they don't have that same, on a long ride, that same, efficiency as far as time goes, as far, getting a gas refill and going, the speed, torque, and all of that thing are significantly better in this than the gas model. So there's a ton of potential here, and it'll be interesting to see how this all shapes up between Tesla and now the Fords, the GMs, the Volkswagens of the world.
So here we've got nice increasing ownership, exactly what we want to see. We've got 3 high quality funds, Fidelity in there as well. So that's fantastic. Great estimates for 2021, 90% with the most recent estimate revisions upward. That's big. And then just a small increase of 50% in 2022 expected as well. So that's very impressive.
And I would say this also, remember we were discussing quarter over quarter earnings and sales,
right?
Sales or revenues, whichever you'd like to call it, went to another quarter over quarter high. And you can see here, even though we did decelerate from 300% to 95%, we've got a recovery to 304%, a new high quarter over quarter from 4 quarters prior. Not to mention, and you've already pointed out those estimates, even after being revised downward, they're looking for a 50% growth in 2022.
Right.
Very hard for me to count Tesla out based on, historical precedent of other big leaders. And, I'm by no means an EV analyst, but, from the little bit we can, just based on prior leaders, prior cycles, and the way things act, there could still be some juice left in these things. So especially Tesla, who's been the leader up until this point.
Perfect. We'll leave it there. Thanks for watching, and we'll see you guys in future videos.